instructions in.
Sure.
Good morning.
So, come on, guys, I already put the instructions in the text part. Could you help me, or we are going to omit this class again?
Okay, so I will start. Uh, so I think the top new right now is um, the situation in Iran, and this war. It affects the economy, and well, right now what is happening? Well, the United States is, I guess the word is bombing Iran, and Iran is also bombing Tel Aviv and Israel. So right now, there is a few, you know, speculation, I guess,
Speculation. Yep.
because of the price of the petroleum. Right now, the price of the petroleum is down. Well, this affects in airlines, American Airlines, or any industry that use petroleum to transport and so on. And also, this affects in the well, I read about the right now the no sé cómo decir Reserva Federal, the
The,
Fed,
yeah.
Federal Reserve, I guess, is thinking about reduce the interest rates, but right now because of the war, um, it seems difficult because the price of the petroleum that is down, and also the S&P also gets down, but that's something normal, I guess. Well, not normal, but measurable. And what else? So, because of this, fear about the energy. Right now, the interest rates. Well, the Federal Reserve is, like they're moderating this matter, and also because of this, the Treasury bonds uh, are, you know, um, bueno, están subiendo, vaya, están subiendo because of the this fear of the high inflation, and also that affects that the gold price also gets down like 1% because of this esta alza de los bonos. And well, that's what I was reading about this 5 of March, and the global economy. So somebody have something else, I would like to listen. So
To
thank you.
hear. Yeah. Thank you. So remember 5 comments. So let me read because someone. Pamela, this week has been pretty intense. Honestly, the biggest thing is the huge escalation in Middle East after the strikes in Iran, which is already making gas prices go up everywhere. Here in Mexico, everyone's talking about the confirmation of El Mencho's death and, of course, the massive 8M march happening this weekend. Also, the energy from Shakira's concert at the Zocalo is still over social media. It is definitely been a week where a lot of major things are happening at once. Okay, so very nice summary of the week and the main topics that are moving through the country. Just speaking internationally, one of the key highlights that I saw that are very uh, powerful or record to tell in that way is that the last week there were registered uh, first time since 90s, before 1930s. It means from the Great Depression, more uh, immigration from the USA than immigration. Uh, so people, it's going out from the states because there is a fear of an attack from Iran or Russia or China to the states. Of course, just talk honestly about the class and things to be all in the same channel. It is very, it's quite remote to expect to have an attack in the US because this could start third war. So I don't think this could happen. However, the reflect of the uncertainty and the fearness in the society is very clear, as your um, classmate comment. There is a lot of patience or cautious about the investment decisions, and it is something natural in the market that is happening. There is a lot of like uncertainty on governments because there is an increase in commodities and in metals. So this reaction of the governments to make political tension to return the trust in the money, not in the goods, it is a normal reaction, a geopolitical reaction, because people metals was increasing a lot, and this make that the economy slows. And in general, what globally the economy wants to do is that incentivate the economy because it was stopped like 2 or 3 years through the pandemic and other events. So it is like a strategic game between politics and social uh, psychology, social mental health, to try to maintain a health economy. For example, we saw clearly here in Mexico, as Pamela commented, even when we have this issue of the death of one of the leaders of the cartels in Mexico, there is this sense of protection in Mexico City. And more than only show protection, there was a massive event, no? The Shakira's concert in Zocalo. So it is a way to show to the world that Mexico is safe. And probably if you live in Polanco or in Condesa, even in the center in Miguel Hidalgo, Benito Juarez, probably you feel safe and do not worry. But if you're near to the limits with the Mexico State or in the majorities of the Mexico State that are part of the Mexico Valley, it feels this fear and this like social fearness about what is happening. There is a lot of cops. There is a lot of people driving super fast. People do not respecting uh, BL rules or transit rules. And things like that, do not respecting the speed limits. There is some hours in the day that there are no cars in the street, and there are other moments that it is crazy. It is nuts, the volume of cars in the street. So, for example, I don't know if you probably yesterday used your car, but it is like raining cat and dogs, literally in the street, not in the weather. It is a lot of cars. It takes like a 10 kilometers more than 1 hour. So it's crazy because there is no payment date. There is no like a massive events. But who knows what is happening in the city? I feel that it is like a this crazy sensation that we need to continue doing life because we do not know what is going to happen tomorrow, as Benito said again. But I think these are moments that people should be more quiet, try to wait just a few weeks to know what is happening. So I don't know if everybody feels the same that I feel something different. It is very funny the way that young people see these things because they feels like nothing is happening. There is no uh, protests in Fez. Everything is okay. We're going to prepare a concert. We want to prepare the party of this semester. Blah blah blah. Worlds go on, and it's very nice for me. It's super amazing to see that young people do not have these issues and feel this fear that grown-up people feel. So, any other comment, conclusion before start the class?
I think I really experienced that feeling that you are talking. Everything is so weird lately, but I really have this thought that everything is gonna be okay at the end of the day or the month or the week or of my life. I think. Um, and also I saw the price of the dollar and how's the peso depreciation, and
Depreciate.
I searched something, and well, there's not a lot of information. It's been like 4 days since dollar is appreciation over peso, and everything I found, which is not too much because I don't do a good research, to be honest. It's all about the Irani conflict, geopolitic, um, incertidumbre. I don't know how to say in English.
Uncertainty.
Uncertainty. Thank you. And also the rates of inflation in Mexico seems higher than we expected. So this is something which um, I don't know how to say. Um,
Spanish is okay, the word.
bueno, que impactó, ahora sí que impactó como esa noticia de la inflación. Sin embargo, como que no he visto aún como que un documento real en donde se esté hablando de la inflación.
Okay.
Y pues sí, igual lo que comentó usted sobre los carros, hace 2 semanas teníamos y se veía súper cañón la contaminación en todo el Valle de México, exageradísima, pero así feo, mal. Y, o sea, realmente antes, yo me acuerdo que cuando era niño y había contingencia, realmente sí había una desaparición un poco, no considerable, pero yo sí notaba un poco de menos carros. Y esta vez no se notó absolutamente nada. Y, o sea, parece que todos como que seguimos con nuestra vida porque hay frentes fríos y el aire se está llevando toda esa contaminación. Pero pues al final seguimos estando nosotros aquí.
Okay. Well, very nice reflection. Just to comment about how to say this, uh, the words about inflation, you need to say the impact of the inflation in the prices or the markets. It's the way to explain that part. And talking about the effect on the environment on these contingencies, well, yes, it's a through, but really I'd like the way you managed your message because it is something that I want to share with you. Please take out the anxiety. It is important to not be blind about this situation and to understand what is happening and how we can change, at least from ourselves, uh, the behavior of the Mexican society. But we do not to be overload about this responsibility. Just doing well our things, we are helping the country and the world. Okay, so just the one, Sofia.
Yes, I heard the podcast Espresso Matutino, and I find it like really interesting, but it's like complicated to hear it all because there is so much news and to remember in all in the week. Like it happens a lot of things around the world, and the news that I have in my mind that I remember and attract my attention is that United States, I don't know if due to war, is like wants to grow the security in their country, I think I didn't understand well, but I heard that they want to make security more in enterprises, the like the enterprise look for your biometrics, um that data, and and they will buy all the cameras and stuff in Mexico. I think I didn't understand that well. And also, due to war, traveling around the world is expensive here because of the, how do you say it? Aerolíneas? Is
Airlines.
airlines. Uh-huh. The airlines don't pay the cancellation of a flight because of war, and it's getting very expensive because travelers want more expensive. Yes, because travelers want to like secure that flight, and that's the news that.
Yeah, yeah, that's something, and maybe for you to think, probably next weeks will be very low rate flights because people feel fear. So there is will be like a massive movement to peace paradise from rich people, and then there will be a stop in the traveling. So it is a good moment to plan your next vacations to Guatemala, Europe, Cancun, whatever. Cancun, I don't think because several people, for example, from Florida, feels safer moving to Mexico to Cancun, even when it is not really like the best idea in this moment. But the people of the United States of America thinks like strange or go to Los Cabos, and it is like God in Cabos happens everything all time because there is no people there. So it is really strange the way that foreign people thinks about security in Mexico. From my point of view, Mexico City is the most safe place in the country right now. However, this doesn't mean that we are not exempt to be part of something about the criminal action or like what we comment, no? If you can see, I have a car accident last week. I think I comment with you. Um, and because two motorcycles crashed with my car when I was in a traffic light. So that's kind of super strange thing because I was not moving and boom, like flies on the glass crash against my car. So it is like something really strange. So, but fortunately, I am okay. So I can give you the class and try to retake because next class I will be flying to Japan. So just to start now, well, I will close the comments. You can comment if you want still comment something, but no more comments to take advantage of the time. Um, I think someone has their hand raised. No?
It was me, but if we're closing the comments, it's okay.
Okay, perfect. So just to let you know, next class I will be flying to Tokyo. So I think will be impossible to me to connect, but Alberto will be online. So the idea here is that you use the class to maybe interchange some ideas about the practice and ask Alberto he take notes or to try to help you with the code or the operations. And if there is no answer, at least he will send to me. Also, you can use the forum in the classroom to send any doubt uh, so please make me start a conversation here. And I do not understand which means a kaike, or I do not know which is the library that professor used in the class. So somebody can tell me another approach to validate the R square or the fairness of the test, whatever. And the idea is that we help each other to prepare the practice and use this class because I could not connect. on Saturday, I think I can connect from Tokyo. So next week we will have the class if everything goes well. Um, but on Thursday I could not because I will be flying. And just about the topic of the dollar, can you see my screen? Yes.
Yes.
So the comment that you do about the FX is this, no? We saw since the beginning of the year, after the issue of Maduro and things like that, that trust in the United States goes down because they do not report well numbers in the economy and employment. The inflation goes down, and there are other emerging markets like Mexico that reflects more trustfully or trust to other markets. So uh, peso appreciates a lot during the first quarter or the first 2 months. We saw this decrease from around even almost 18 pesos to almost 17 at the beginning of the end of February, beginning of March. And then we saw this geopolitical reaction that I comment about the attacks and the threats against Iran in March, and the normal reaction is, okay, if there will be a war, we need to trust in the United States again. So there is not like peso depreciates, there is like a correction in the price. So this is like a false decrease because if we eliminate these 2 months, it seems like we continue in the trend of the relation about 18 pesos, which seems like be the real price. So this is the cycles, the small cycles or small situations that we need to understand in the economy and in the market. No, maybe this is a correction of price. We are recognizing this unrealistic decrease and returning to normal levels around 18. Does anybody see this correction that I am trying to explain? Yes, Sebastian.
Yes, I saw it. I don't really think. Well, I think you're correct, and I don't even think about it. But because the price of the dollar was to, bueno, iba a la baja since
Yeah.
last year or 2 years or maybe more. So yeah, okay.
Okay. Yeah, and that's something that I do not want to teach in that way because this is like in a speculative way to understand the market behavior, but it is realistic because this is social behavior. It is not mathematical. The price of the stock market and exchange rate is perception not of the individuals, it's perception of the societies and the investors. We comment that, and that's why we start with macroeconomics. But the comment of Sebastian is very right. The trend that we saw of the dollar is decrease. And maybe this is a correction. And we do not know if this will just an stabilization to return from normal levels around 18, or we will start to see an increase. But at least from 1 year, we saw decrease, 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 decrease. We have a local minimum, and we are having a correction here. What will be going to happen? Maybe we will achieve a maximum, and then again stability or decrease. Who knows? We saw the last 5 years. We saw here decrease, minimum, increase, decrease, 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 peak, decrease, increase, increase, peak, decrease, 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 correction. So probably if we think that this replicates this issue, we will have a maximum, then a decrease, then an increase, increase, increase. So probably what will happen here is increase, increase until the tension about geopolitical stops. So it is a good moment to take advantage if against goes around 70.5 the dollar to buy a lot of dollars and sell when it is around 20 to have like some earnings, like 20% of earnings in a month. It's very nice investment, or in 2 months. So if you have a small saving, then you can buy dollars. Probably today not, but if you saw around 70.5 or lower than 70.5 the opportunity to buy dollars, do it, save it. And if not, you have some saves to go to Las Vegas next year or for your graduation. Okay? Clear for everyone? So perfect. So let me check how about yen because I do not know what's going to happen with my money next week. Okay, so let's see. One moment. So peso is depreciating, or no, peso yen. Let's change the way to see and understand clearly. Peso yen. So 1 moment. It's depreciating. Even when peso looks like it's depreciating against dollar, yen is depreciating more. So no, peso is depreciating because in the past it's 9 yens for 1 peso, and now 9,000 yens for nine yens, 9 yens, and now you're 8.8. Well, it's not a lot, so there is no issue here. Anyway, we will be rich in Japan, so okay. So let's start the class, and please, beside to follow this, any newsletter that you want to, I recommend as your classmate comment to hear Espresso Matutino because you 10 minutes to quick have some like insights what is happening in the economics. But you can use anyone you want. You can use El Financiero, you can use the New York Times, uh, Wall Street Journal, whatever you want, it is okay. But try to follow something to have some insights. You can use X, you can see Televisa, but for example, local media do not talk a lot of financial things, especially worldwide. So use like a newsletter or follow some account. It's nice. There is a lot of podcasts of economy, very nice podcasts. So you can also listen, but there is like 20, 30 minutes and they speak about other topics. So what I like from the one that I shared with you in the classroom is that it is like very synthesized. So you can just not you not need to hear daily, but you can hear on Fridays and on Mondays, and you have like the summary of the week and the summary of the weekend, and it is okay. So let me start the class, and please any comment or doubt share with me. I'm sorry because I feel tired with this thing in my neck, which it is awful to have.
The accident was
So,
in the night or in the morning?
sorry,
The accident was, well, in the night,
what thing?
uh, about the night.
Yes. In it at 6 p.m. Or I don't know. Can you ask in Spanish to be clear on the question?
Oh, yes, 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 you understand.
Yeah, Friday 6 p.m. I was going to see my sister near from the house. I was waiting for her, and the motorcycle crashed with me. So, so does anybody some class previously or know which is a derivative? Can you share with me what is a derivative?
A financial instrument,
Uh-huh.
and there are types of derivatives like swaps, options, forwards. Um, I'm seeing in my work the use of caps, and I understand like it's a chain of um, options. I don't remember, and you can calculate, estimate, blah, blah.
Okay. So someone else, if you want, it is okay here in Spanish to be clear that you know what is a derivado and what kind of derivatives we have. Oh, let's do this. Raise the hand who doesn't know anything about derivatives.
Bueno, yo no he tomado la clase, pero por lo que me han contado, sé que es para, digamos que hacer inversiones riesgosas.
Well, okay. So let's
Yo
move.
podría,
Yeah.
bueno, sí, bueno, es sí es un instrumento financiero, pero como tal lo que haces es, este, es como una apuesta, digamos. Tú haces un contrato con algún intermediario financiero para comprar o vender una acción a cierto precio en un futuro, un determinado periodo de tiempo. La acción puede bajar o subir y depende de, ahora sí que, de este movimiento que haga, si tú vas a ganar o vas a perder. Y también depende del movimiento que tú quieres hacer, comprar o vender.
Okay.
A veces si lo vas a comprar y el instrumento es, pues, más, caro, ya, digamos, llegando al periodo en el que querías comprarlo, pues, ya te ahorraste un dinero, porque, pues, el contrato ya dice que, pues, vas a tener que comprarlo a ese precio. Y, eso te ayuda a ti primero a, pues, a comprarlo menos caro también, pero también, digamos que ya, involucra un poquito como cosas de riesgos, ¿no? De que, pues, a veces contratas forwards o, bueno, como contratas derivados para, cubrir ciertas, pues, operaciones que tengas, ¿no? O un dinero que tú quieras, como guardar o no sentirte, pues, preocupado, ¿no? En el futuro por el cambio de precio, ¿no? Ya sea en una acción o en no sé cómo se le dice a los metales y así, pero generalmente es sobre eso, ¿no? Entonces,
Commodities.
commodities, ajá, tal cual. Entonces, no sé si, o sea, bueno, esa es mi idea de que tengo de un derivado, entonces, si me
Okay.
puedan corregir algo así, pues está bien, ¿no? No hay problema.
No,
Gracias.
it is okay, but there is like an actuarial way to understand a derivative, not like a financial way, but it is okay. So I think someone else has the hand rights. No.
I think that they raised their hands because you said that if one person doesn't know anything about derivatives,
Ah,
to
okay,
raise
perfect.
their hand.
Okay, okay, right. Thank you. Okay, so I forgot, but just to have advantage and did you have time? I already you have the as a task to review the video of CAPM model and to understand this relation of return and risk. So if you do not do, please use the next class also to review that part. And also I uh, published some information about the returns on the Pfizer uh, action. It is not action, the word. It's the stock or the price of the title of Pfizer. So please review the data that I already published to review. And next Saturday, we will review and talk about these two things. CAPM model that relate to understand, to have all the same understanding about what is a return in a stock or in an asset, and also we will show the example through the Pfizer historical data to start to make market analysis with this stock, or we can use any other one, but the one that I have already published here is the one of Pfizer to review. Maybe if you want, what you can do is select one title that you want to analyze and replicate the things that we will do in the class with the Pfizer information with the one that you want. You can use Tesla, you can use Apple, you can use Bimbo, you can use Liverpool, Grupo Val, whatever you want to start to make in your practice, because probably we will do a practice here or maybe an exam. I don't not know yet clear what we will do here, but it is good to try to replicate the things that we will review here. So please remember, for the next Saturday, we will start class commenting CAPM model, because this is the beginning of the unit, to comment and have the same understanding what is the return on an action and the relation with the risk through the efficient frontier, which is the use of the application of CAPM model to the mark of its portfolio theory. So please review the video and review the information that I shared with you about Pfizer. And before starting the review of option that I think is the one that I want to focus in this class, to understand the market risk strategies to cover or to manage the volatility in the portfolio, I would like to start with the definition. I do not know if the presentation start with this or not. No. So about derivatives, and let me explain this part in Spanish. Los derivados se llaman derivados porque tienen una característica, como bien dijeron, es un contrato financiero que surge a partir de un activo subyacente, ¿no? Entonces, por eso es derivado de una acción, una moneda, un bien material, un commodity. Entonces, por eso se llaman derivados, porque dependen de un precio subyacente, ¿ok? Entonces, esa es la forma de entender semánticamente que es un contrato financiero derivado o un instrumento financiero derivado, ¿vale? Las definiciones que me dieron son correctas, pero son especulativas o son definiciones de un actuario, ¿no? Es un contrato con el cual se puede especular o generar ganancias, ¿no? Con el que se puede lucrar. Y eso rompe uno de los principios de los derivados. Los derivados son contratos que normalmente están regulados en un mercado, y ahí hay dos tipos de derivados, on the counter and over the counter, y significa que si están dentro de un mercado regulado o fuera de un mercado regulado. Y que tienen arbitraje o no tienen arbitraje. Usualmente, pues lo que queremos son instrumentos arbitrados para evitar que haya este abuso y esta especulación. Entonces es muy importante que entendamos eso, porque cuando ustedes platican que un derivado es un instrumento para generar ganancia, pues van a decir, estos güeyes son unos apostadores, ¿vale? Cuando realmente los derivados son instrumentos que nos ayudan a estabilizar la volatilidad financiera o reducir y administrar el riesgo de mercado. ¿Sale? Entonces sí es súper importante, porque hay varios profesores en la carrera que les gusta hacer rockstars y platicarles que los derivados pues es una buena opción para generar grandes rendimientos con mínimo riesgo, porque pues, son muy fregones haciendo notas estructuradas, y no se trata de eso. Los derivados son instrumentos que nos ayudan a poder cumplir con nuestra planeación financiera a través de una buena gestión de activos, ¿vale? Entonces, si de paso podemos garantizar un rendimiento, está fregón, pero estar pensando en que los derivados son instrumentos para generar ganancias, habla de que no entienden que es un contrato derivado, ¿vale? ¿Dudas al respecto de eso? Okay, so just to share with you my experience with derivatives, I have never been in a company who use derivatives in their portfolio. However, when I leave Allianz, I have the opportunity, or well, the offer to join Banco de Mexico to be inspector for derivatives. And it is very satisfying for me to hear the director of central bank in Mexico that he tried with their best to have me in his team, because he likes a lot the test that I do to be inspector of derivatives in the central bank. However, I have a better offer in HDI to be chief actuary, so I do not take the opportunity to join the central bank. But it is very nice for me because I have never been in contact with the bank institutions. And the comment that I receive is, you have an amazing probability exam and very nice understanding on the derivatives. So it is like very satisfying to hear that I have good understanding in these kind of things. And that's what I am sharing with you, that it is very important that you do not just go through this feeling that you know what is a derivative because you can speculate or have earnings through these contracts. The objective of a derivative is to use the instrument to guarantee the financial objectives of the company, or even more, to make risk management in the assets, okay? So as you comment, the first derivative and the most simple way to understand a derivative is a forward or a future. And more or less, future or forward is the same depending on the way that it is established, the contract in a established market or not. But the idea, and maybe what I suggest to you, is to put in YouTube a quick explanation of what is a future or a forward. There are several pages like specialized Wikipedia. I think there's one that it is called Investopedia, and there is a lot of sites with good documentation and easy way to explain what is a future and a forward. Or also you can look for a video on YouTube, and there is very good explanations on that. But we will not go deeply here on derivatives until Unit 4, except for options. But a future, or the objective of a future or a forward, is to fix a price. So for example, if I am a company that buy, I don't know, corn, because my industry is to have pigs and I need corn to feed the pigs. It is clear this part. I have some pigs like oink oink, and I need corn, yellow corn, to feed or feed the pigs. But yellow corn is produced in the States. I have the risk factor of the volatility of the dollar, beside the risk factor of the price of the corn. Is this clear for everyone? So what I try to do with some producer in Texas or in Colorado or whatever is to set, well, the average price of the uh, yellow corn that I bought to you is $1,000, to say something, and in pesos is 20,000 pesos. So let's sing the contract that for the next 6 months I will buy to you in 20,000 pesos the amount of corn that I usually request for you monthly, or to fix that I will buy this quantity of corn at $1,000, and we eliminate the fluctuation of the price in the corn. And if we fix in pesos or we fix in dollars, one of the parts eliminates the volatility of the exchange rate. So this is the way that a forward or a future works. We fix a price during a certain time, and in some moments of the contract, the producer gains because probably if we fix, for example, in dollars, in pesos, and peso appreciates, he gains more dollars. And but if peso depreciates, we pay the amount of dollars with less pesos. So the buyer has a benefit. And we can sort through time the earnings and the losses each month. And this difference is called margins. So these margins are the profits. And usually in a regulated market of futures and forwards, there is some arbitrage. So there is established that the margins could not go over some amount and need to be compensated to guarantee that the price is in the average or the expected value. Is it clear for everyone? Okay, so this is like one of the instrument, and it is the most common instrument that we see in the derivatives, future or forwards, that protect the price. And we will so it is when you are the person that sells or fix the price, you are taking a short position. And if you are the one that takes the position to pay the value, you are taking a long position. And there are several kind of options, derivatives where you can define if you can make the payment in a fixed period, or you can do through the whole contract or whatever. So we will not go deep because this is not a class of derivatives, but there is something that if you take or you want to learn of derivatives, you need to demand to your professor to teach all these things. Okay. And again, just to let you know how Professor Arcilio knows a lot of this, because in my master I have like 6 classes of market risk, financial risk or market risk. They have 3 classes of valuation of assets, 2 classes of market risk, one of programming and numeric methods in finance. So we saw a lot of times these kind of issues in the master, and with this you are very clear about this situation and understand very well which is the one of regulation of Basilea, especially just for Basilea, and local regulation in market risk, or well, in financial risk. So you learn a lot and you practice a lot, like if you were working in a bank or in a central bank. So it is a nice option to take a master. If you like finance, for example, a master on finance or in risk management, you learn a lot. And from the best, because, for example, as I comment last class, one of my professor was director in the CMBB. Other ones work in central bank. Other ones are PhD in finance or in economy. So you learn from the best. So regarding the asset with the fixed, okay, can you hear me?
No, yes, before I think it was like cortándose.
But in what's the last thing that you listen?
To my, well, that your professor was a director.
Okay, so well, let's avoid that story, and another time I can share with you the nice experience to study a master degree. But returning on what happened or regarding the class, we already understand what is a future or a forward just in an easy way. And let me summarize in Spanish to all be in the same channel or in the same understanding. Los futuros o los forwards los vamos a utilizar o tienen esta intención de fijar precios en un periodo de tiempo determinado. Y no son opciones, ¿no? Son contratos donde queda pactado eh, el intercambio de un bien a un precio establecido en un periodo de tiempo determinado. Esas son las características que configuran un contrato futuro, ¿no? En un mes yo te voy a comprar una tonelada de maíz amarillo en $1,000. Y tú me tienes que entregar una tonelada de maíz amarillo y yo te voy a pagar $1,000. No importa cuál sea la relación del dólar con el peso, no importa cuál sea el precio del maíz amarillo, tú y yo pactamos que en un mes se va a hacer ese intercambio y por los siguientes 6 meses, ¿no? Entonces cada mes tú me das una tonelada de maíz amarillo, yo te doy $1,000. ¿Estamos claros ahí cómo funciona el futuro o el forward? Y lo que les decía, la diferencia entre el futuro y el forward es que uno se compra en un mercado regulado o en una bolsa donde hay normas y hay un árbitro y otro se compra de cuates, ¿no? Yo le digo a Sofía, Sofía, tu papá es productor de maíz, eh, tú y yo somos cuates y me vas a vender a $1,000 de bros y me lo va a vender a 1,000 y nadie más sabe y solo ella, su papá y yo intercambiamos así o fijamos así el precio, ¿no? Esa es la diferencia entre si está en el mercado o no está en el mercado, ¿no? Y en el mercado, por ejemplo, en el Chicago, se llama Forex, el mercado más importante de derivados, que es el mercado de derivados de Chicago. Ahí pues hay muchos brokers o muchos intermediarios que lo que garantizan es que haya estas llamadas de margen, ¿no? Ah, le llaman, se me fue la palabrita que usan en inglés, pero como
¿No era margin call
compen-
o algo así, literal?
¿cómo?
Margin call o call to the market o...
Ya, market call es cuando se como que se re- refija el precio, se recalcula el precio pactado. Sí, llamada de mercado, y también se les llaman llamadas de margen, ¿no? La verdad es que no es nada difícil los términos en inglés cuando le encuentras la lógica, ¿no? Que fue lo que platicamos, ¿no? Se llaman derivados porque necesitan un activo subyacente. Entonces, son derivados del precio del oro, derivados del precio del dólar, derivados del precio del bla, 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 ¿no? Son futuros porque fijan un precio en el futuro. Son opciones, que es lo que vamos a ver, porque te dan la alternativa de ejercer o no ejercer el contrato. ¿Ok? Entonces, yo lo que les sugiero otra vez es búsquense unos videitos, traten de entenderlo ustedes y cualquier duda, pues para eso son las clases, ¿no? Para que lo que no les quede claro de forma autodidacta, pues lo podamos socializar en la clase, ¿vale? So, returning to this, we will review in the following, I don't know, like half hour, what is an option. We'll make an introduction on the options. So the difference between a future and an option is that in the future you have the obligation or the responsibility to make the exchange of the goods in a fixed price. And in the option, you have the chance to decide if you apply the contract or not. That's why it is called option, because you have the option to realize the contract. So just quickly seeing the presentation that I will share hopefully today, but if not during the next days. What is an option contract? It is a financial agreement granting the buyer the right but not the obligation to buy or sell an asset at a preset price within a specified period, okay? So I think it's a very clear definition, and if we saw in this way, there is no speculation. Here is just an alternative to take or not a price, maybe because it represents an advantage. for the one that syncs the contract. And we have two types of option depending on the right that we are buying or the right that we have in the contract. The first is call options, which give us the right to buy the underlying asset in a fixed price, and the put options, which give us the right to sell the underlying asset in a fixed price. So is it clear for everyone this about call or put options? Perfect. So please also for the options, try to see some videos to understand. I do not recommend usually, for example, for options to see videos because there is a lot of approaches to understand the options, the speculative approaches, the theoretical approaches, the economic approaches, the risk management approaches. So there is very a lot of ways to understand an option depending on the objective of the thing of the contract. But for the future, which there is no speculation usually, it is easy to see some material because there is not like these several different approaches in the understanding of the futures. So key terms on the understanding of an option contract. First of all, the strike price is the present price at which the asset can be bought or sold. So when we say strike price is the price that we have currently. So for dollar, we saw that the strike price is 70.80 pesos. Expiration date, which is the deadline by which the option must be exercised, it means should be a defined horizon of time. And it is something that we have been commenting on market and in general in risk management, that to do a well risk management, we need to fix a horizon time. So all the options should define at least an action period in the following 3 months, the next week, tomorrow, whatever, but need to be fixed at term of the contract. And the premium, so here is where an option, it is like the financial version of an insurance, okay? When we have a future, there is not like payment, just margin calls, like to maintain the price. But when we have options, we pay a premium, okay? So the premium is the price paid for the rights granted by the option. Like an insurance, we pay the premium, and in case that we need to uh, exercise the contract, we can request the right of buy or sell in the fixed price of the contract. Is it clear for everyone?
Professor, I remember the definition, and it was marked to the market.
Mark to market, yeah. Yep. The mark to market is like a exchange expression to refer the actual price. But like financially speaking, the way to say it is market value. That is the price in this moment, or the most recent observation of the price. Mark to market is like a colloquial way to say market value. Okay?
Okay.
So use of the options, as we commenting, there is a lot of approaches to understand an option. The first one, and the one that it is like fascinating for the actuaries, is the speculation. So there is a lot of people, even economists and mathematics, that make speculation with the options and try to betting on the direction of the market. And it is an easy way. For example, since we are expecting that the dollar will continue rising in the following months, we can buy an option that fix, for example, to buy dollars in the following month in 18 pesos or in 18.5 pesos, which probably would be a not high cost or not a high premium contract because we are in a price over the strike price that we are observing. And probably next month the price will be 20. Who knows? But assuming that we see the future and know that the price will be 20, buy an option of 18.5 will be probably cost like 10 cents or 20 cents. So we are guaranteeing a price of 18.5 plus the 20 cents, a price of 18.70. And if we know that the price will be 20 because there will be an attack in Iran, we are guaranteeing a margin to sell the dollar at 20 pesos and gaining 1.3 pesos with any investment or with just investment of 20 cents. This is the way that several financial people or investors make speculation with options. Of course, when this kind of instrument starts, there is a lot of opportunity to make this speculation. And then the financial markets try to regulate and to avoid this and make more sophisticated models that limited the offer of this kind of instruments when there is a lot of speculation or prices high because there is not certainty. Uh, so it is not so easy to find this kind of instruments to make like this great deal that I commenting to you. And also it could happen that uh, I don't know, European Union make a statement to the United States to avoid this kind of activities and nothing happens and dollars go back. So you are losing just 20 cents for each dollar, but you are losing because this price never happens. So is a bet because we do not have the necessity to make this exchange of dollars and pesos. Then hedging, which is a protection against potential losses. This is when, for example, you are planning to go to Vegas on May and you want to guarantee that you will have a good exchange rate. So you buy or fix the price on 18 pesos. And if in May is in 20, you can buy your dollars in 18 pesos. And if it is less than that, well, you can buy it in 17 and you just pay 20 cents more. So it is a good option because if you buy today, you buy in 70.8. So with the option, maybe you buy in 70 plus the 20 cents of premium. So you buy in 70.20 and it is a nice like coverage. And for income generation, so writing options to earn premiums. This is the one that it is not so easy to understand. But for example, if I have $1,000 and I know that one of you will go to Vegas next month and I want to guarantee some money, I said, Sebastian, I will give you $500 at 17 if you give me 20 cents for each dollar today. So I do not exchange my dollars because I am expecting maybe to price more, or maybe I am expecting to see a lower price of 17 to get some money, but I guarantee 20 cents for $500 for Sebastian, and I guarantee 1,000 pesos to have my breakfast today without spending any money because the promise is that I will give the $500 on May. Is it clear for everyone, the three examples? Okay. So now how options work, let's see some examples. An example of a call option is buying the right to purchase shares. Shares is the way to call las acciones at a set price. For example, I have a call option when I buy the right to collect Bimbo shares in 80 pesos in the following 6 months. And an example of a put option is buying the right to sell shares at a set price. And this is the example of the dollars that I share with you with Sebastian. I make a put option when I said, I will sell $1,000 for anyone who wants during May and June in 17 pesos with a price of 15 cents for each dollar that you want to send today. So you give me 15 cents for each dollar that you want to exchange with me, and I make the promise that I will sell you $1 for each 15 cents during May and June at 17. And if the price of dollar is 16, you will say, come on, professor, I will not buy to you the dollar, so I maintain my dollars and I gain 15 cents, and you will buy the dollars in 16.8 because it is a better option for you, but I gain 15 cents, okay? And if the price is 18, well, you say, come on, professor, you lose your money. But probably I wait that the price go lower and or exchange in Japan or in China, and I have a lot of dollars, so I do not lose anything. So it depends on the opportunities and the liquidity that the uh, involves in the contract have to make this kind of agreements. Is it clear for everyone? So give me a second because I have no more water. And just think if you have any doubt or comment if we are going well on this topic.
Everything good.
So the advantage of an option are the following ones. Leverage. This gives us the opportunity to control a larger position with a smaller investment. So this gives us this leverage means that we have this like mm, how can I explain this word? Let me think. To take advantage. So leverage is aprovechar, the literal meaning. So take advantage of the situation. As I comment, if I have dollars, this gives me opportunity without selling my dollars, have some incomes if we sign contracts to fix the price for the uh, World Cup, and you get dollars to go to a match in Texas, for example. So this is one of the advantage of an option that gives you the opportunity to have some earnings without making or realizing or selling your assets. So this is the one related with in the previous slide, income generation. Risk management is the one related with hedging. So help us to hedge against potential losses. Hedge means cubrir, and it's the one that your classmates comment to make these gaps or close these gaps depending on the way that we are making the hedging. We cap the price, which means we make put a ceiling for the price, or we cover the price when we make the hedging or close the gaps in the volatility of the price. So depending on the strategy and the instrument, you make hedging to guarantee or to reducing the volatility in your incomes and your outcomes. Okay, and to create a strategic flexibility. So there is various strategies for different market conditions, and this is the derivative strategies or structured notes that also, if you take a course of derivatives, you need to ask to explain what is a bird, what is a bull, what is a butterfly, an iron butterfly, um, and more complex. There is a lot of like strategies with options that guarantee some margin or some earnings. And in the theory is very entertaining to review these kind of things and to see the graphics and why they call bear and they call bull and butterfly and things like that. But in the reality, not always the prices reflects the theory. So uh, it is not so easy to do this in the real life. In the theory is amazing because you see the graphics and you see the butterfly and the double iron butterfly and things like that. But in the reality, it is not so easy to have these kind of advantages. Okay? Questions or comments? Have you ever hear in the past this kind of things about the strategies with the derivatives, the bull and the bear?
Yes, the
Mm,
bull markets, I guess, they are the racing markets. The because of the the no the bull. Yeah, it's the bull. It attacks with the sus cuernos, and you know
Yeah,
it goes up, and the bear markets is there are no me acuerdo, decrease markets, I guess. Oh, sorry.
sorry.
It's because of the well, you can say the attack of a bear is with con sus garras, and it comes from up to down, I guess.
Yeah.
Yeah, yeah, that's the thing.
So which is the city that represents the bull in the United States?
You mean the city?
Yeah, the city.
City, the bull. New York?
New York and the bear?
Chicago.
Chicago, exactly. Because the market exchange is in New York, in Wall Street, and the Forex is in Chicago. Okay? And even that, the pets of the basketball is Bulls in Chicago and Bears in NFL. So Chicago has the two. Okay? But yeah, Bull is New York, where is the market stock, and the Forex is in Chicago, where the Bear stock is. No, and it is very famous to see the picture of the bull in New York. Yeah, and there crazy people say that you need to uh, touch the eggs of the bull to have good luck in the investment, but it is like something that is not real. Okay. Any comment or doubt until here?
Uh, I, I would like to ask about leverage. Is what it means, leverage?
To take advantage, aprovechar.
Advantage. Okay. Thank you.
Okay. Everybody knows the bull in the Wall Street. I will try to share with you my photo of the bull that I have in my phone. I am not sure that I couldn't do this. Dun, dun, dun. And I have other funny photos, but I don't know if are in Instagram. So you can see now my cell phone. This is the bull of Wall Street. Okay. So I present to you that everybody knows. Of course, you can look a better photo in the internet, but this is the one that I have in my phone. And you can take a picture from the other side and see the X of the bull. And there is a lot of people trying to have a photo touching the X of the bull. Very strange. From my point of view, I prefer to see in the eyes the bull and take the horns. Okay? So let's go back to the presentation. Can you see my screen?
Yes.
Yes.
So risk of options. What happened with the options is, first of all, the have options represents complexity, especially when you do not know probability, because options trading can be complex and requires understanding. As I comment, usually people understand the options and something for betting, and that's not the objective, is to hedge or to have leverage. There are potential losses even when it is like an insurance. And it is very strange to think that an insurance could represent a loss because give you protection. But if you are speculating with options, there is a risk to lose a lot of money, especially when you try to collect money making and a bet. As I comment, for example, the situation that I shared with you, that I guarantee to you exchange of dollars, and I do not have the dollars, probably I need to face buy dollar expense here and also lose the money that I get or collect when we sync the option. So, for example, if it is just $500, there is no issue because the possible amount that we share in the example is 1,000 pesos. But for example, if I sync 1 million of contracts or 10 million of contracts, this can represent losses of millions of pesos. So there are potential losses and big losses if we are or we saw market movements against our position, and also the time decay, which means that value of options can decrease as the expiration date approaches. So when we sync contracts in long term, we can buy in a very small price or with a huge premiums because we are reflecting the volatility or the uncertainty in the underlying asset. But when we are close, it's easier to buy a cheaper option instead of waiting to apply the one that we are saying. And to understand that, we need like to go deeply in the Black and Scholes formula. So let me think if next class we can review, but an additional task, and this is just optional. It is not like an obligation that, as the previous ones. If you can review what is the Black and Scholes formula to forecast the price of an asset, would be nice, and we can review next class to understand the Brownian movement and the Black and Scholes formula to review why there is this understanding that the price of the options increase or decrease through the time. And the issue here with the Black and Scholes model or the Brownian movement approach is that this model use normal distribution for the returns. So when we have long term in a normal distribution, or we want to understand the possible movement in the price of an asset, we reflect all the variance of the normal distribution. So through the time, the variance increase proportionally to the time. And this made like huge gaps on the possible price that we can observe. That's why it is not so nice, or it is not the best way to model asset prices with normal distribution approaches in the returnings or in the volatility of the market. Okay. Comment or doubts? Does anybody knows how is called these graphics that it is in the screen?
Candles, aren't they?
Candles, exactly. Okay. So we can teach or we can review this topic through I forget the word of the way that they explain finance in this way, but it is ay, tenía la palabra aquí, pero se me fue. Pero nada más para dejar esto claro. Aquí abajito tenemos un histograma, aquí tenemos la tendencia del precio y tenemos las velas. Y análisis técnico le llaman. ¿No? De técnico no tiene nada. Pero la gente que cree que sabe finanzas y no sabe matemáticas, dice que entender estas gráficas, como lo entienden los financieros o la gente de la bolsa, es hacer análisis técnico, ¿no? Entonces, para entender estas cosas se llaman gráficas de caja o gráficas de bigotes, y si sabes estadística, y lo que representan es el segundo y el tercer cuartil de la distribución, o una proporción de la distribución, que es la parte de la vela o la caja, y los bigotes, que son las puntitas o la mecha de la vela, representan todo el rango del precio observado, ¿no? Entonces, cuando tenemos, por ejemplo, una vela chiquita, quiere decir que concentramos la mitad de los precios observados en un rango pequeño, pero con mucha volatilidad. O aquí tenemos un precio volátil, pero con valores extremos cortos, ¿no? Y las cosas son raras cuando vemos esto, ¿no? Una vela chiquita aquí y un bigote muy largo hacia abajo, o un bigote largo, muy largo hacia arriba, ¿no? O una mecha muy larga. Entonces, la gente que cree que sabe, pues se imagina velas aquí, pero son cajas, ¿vale? Y luego tenemos el histograma y lo mismo, ¿no? Hay gente que dice, no, la tendencia ascendente es muy clara, ¿no? Y cuando ven esto dicen, no, pues quién sabe, estamos en un valle. Y dices, pues no son montañas, son finanzas, cabrón. Entonces, a eso le llaman los financieros análisis técnico. La neta, no tiene ningún chiste eso. Y la gente, cuando se encuentran a alguien que trabaja en una casa de bolsa, que les empieza, no, es que ahorita el dólar está en un valle, güey, y no sabes, o sea, en cuanto lleguemos a la montaña, no vamos a alcanzar la cumbre, güey, y no, nos vamos a ser ricos, cabrón, ¿no? Es un güey que no sabe nada de finanzas, ¿no? Entonces, no se vuelvan esas personas, por favor. So regarding about the option trading volume, something that is important to understand in the options assessment is that we need to understand the number of transactions that we have in the instrument, which it is called the volume of the options. And this reflects recent trends. For example, if we have huge amount in the volume of transaction, it means that a lot of people is buying or selling the underlying assets. And this gives us lower prices. When there is a lot of volume, it means that there is a lot of transactions, and we could look for a best price in the option. And there are other factors, like, for example, driven by retail investors, interest and market dynamics, as we comment, for example, the decision of the central banks or the big investors move the trend when, for example, other country lose rates. This affects the exchange rates, that it is something that we call systematic risk, okay, or systemic risk. Clear this part for everyone? And that's it. So for me, And for today, I think it's enough of reviewing the topic. Please try to review some videos or some material, some documents, some Investopedia or some sites about what is an option, a future, a forward, a swap, but especially options, because options we will use as a strategy to make risk management through hedging the portfolios. Okay? Questions or comments? If you can make questions in Spanish, we have still 20 minutes. If not, thank you for your time, for listening the class, for supporting my strange way to teach risk management, but I love risk management, so sometimes I feel passionate of this topic. And have a great weekend. If you have no doubts, you can go to have breakfast or to rest before your next class or to start your weekend. Okay?
Okay, thank you.
Thanks to you. Have a nice
Thank
weekend.
Thank you,
you.
teacher. Have a nice
Nice
weekend.
weekend.
Hope you get
Thanks,
well.
teacher.